Coming back to the HDFC Bank results, I've got Adita Shah, founder of Hercules Advisers, on the phone line with me. Aditya, good afternoon. I know it was a bit of a rushed call, but I just wanted to get a sense from you about what these numbers tell you. Provisions are up. You know, I'm not looking at the net profit number because that is being boosted by this one-time HDB financial listing benefit. But other than that, what are the other numbers telling you?
So steady set of numbers. The loan growth and the deposit growth was already known at about 9% of loan growth and 15% of deposit growth. Asset quality, in my opinion, is a tad bit better than expected. I think the gross NPAs have improved to about 1.24%. That is something that is a positive. I need to look at the net interest margin. I have not been able to look at that number. That holds the key for HDFC Bank. Any improvement there would be a positive. So that is something to watch out for. Overall, a steady set of numbers. I don't think there is anything to complain about from an asset quality perspective, and I am just something to watch out.
You know, if you look at what Federal Bank was reporting, and that was one of the expectations at Federal Bank as well, that you would see the net interest margin actually come down. The loan growth has just been about 6% at Federal and 12 basis point improvement on the net interest margin front. So I'm trying to understand, is this a period where the net interest margin starts to expand a little bit? Even Axis Bank saw 3.73% net interest margin. Yes, there was a contraction, but it was not as sharp as one would have expected.
So HDFC Bank has a really different set of challenges when it comes to the net interest margin. Before the merger, the net interest margin was somewhere close to 4.1%. It has come down to 3.3% or 3.4% or so. So the challenge for HDFC Bank continues to remain to accelerate the retail loan growth, and from there on, try to recover bit by bit the net interest margin. The net interest margin will take time for HDFC Bank. Mind you, a Federal Bank is a very small bank. With the size of HDFC Bank, the net interest margin will take time to recover. So from my perspective, very different set of challenges. Management commentary with respect to the loan growth next year will be a key trigger, because we already know that the loan growth was supposed to be slowed down this year, and that is exactly what they have done. Next year, how the loan growth will shape up, how the retail growth will shape up, which will then lead to the expansion in NIM, is something to watch out for. So very different and unique set of challenges that HDFC Bank has got with respect to the merger that they have taken.
A quick word on ICICI as well, because that number is expected in some time. What is your expectation looking like?
So I expect a very good set of numbers, loan growth at about 10 to 15%, similar number on the deposit growth side. And I also expect an improvement in the asset quality. Asset quality continues to remain the central focus, given the microfinance and the unsecured loans are facing a lot of troubles. Yeah. That remains the central focus. In my opinion, there also ICICI Bank will see an improvement in the asset quality. So from my perspective, ICICI Bank, the market leader, HDFC Bank, we are looking at the NIM. What happens there, then we'll take a call on the stock.
Super, Aditya. Thank you so much for giving us that quick view. That was Adita Shah, founder at Hercules Advisers, joining us on the phone call.